to heckle back. All right, let's get started. So it's my pleasure to be kind of moderating this panel. It's my pleasure because I think a good moderator is going to shut up a lot and let the excellent guests speak. So I'm happy to shut up a little bit after I introduce the panel. What we try to do is to gather people from the industry who are doing things related to blockchains, cryptocurrencies, and to provide who can provide a diverse view of this industry and where it's going. So the guests here are all actually located in Israel. So this is these are all local or partly local companies that we're proud to have, and local people that are great. And I won't introduce everyone, but I want to let everybody introduce themselves. So maybe we'll do like a quick round of introductions. Then what I want to do is to have every one of these guys talk for 5 or 10 minutes about what they've been doing recently, about their company, their effort, and then we'll have some more questions and questions from the audience as well. So maybe Gadi, you should get started.
So quick intros first, and then
quick
deep
intros.
dive.
Yeah.
Okay.
Quick intros.
Okay. So my name is Gadi Glikberg. I've been in the crypto industry for the last 5 years. All of that time in the mining field. Up until last week, I was running the local R&D center for Bitmain. Bitmain is the largest hardware manufacturer in the cryptocurrency field, and we'll dive more into that shortly.
I'm Vita Bortnikov. I'm leading the blockchain in Haifa Research Lab in Haifa, Israel, and I think I will cover more the things that are blockchain and not crypto, which I believe are not less interesting but maybe less cool, and that's why popular. And we are leading the project which is called Hyperledger Fabric, which is a blockchain, permissioned blockchain platform. So I'll tell about this a bit later.
Hi, my name is Uri Kolodny. I'm a co-founder and CEO of Starkware. We're based here in Israel. We're commercializing Stark, which is a zero-knowledge proof protocol for permissionless blockchains. Our focus is first and foremost on scalability applications, later on privacy.
Hello, my name is Zhao. It's pronounced like wow, except with a Z. And I'm the CEO of Daglabs. We're focused on commercializing Phantom, which is a block DAG implementation, a generalization of Nakamoto consensus. And we're also focused on, focus on real use cases. So, yeah.
I'm going to try to catch my breath. Jonathan Rouach, CEO of QED-it, CEO and co-founder of QED-it, doing zero-knowledge proofs for enterprise blockchains. Thanks for having me.
All right, so this was the quick round of introductions. Now we're going to give everybody like 5 to 10 minutes to tell you a little bit more about what they've been doing, like a deeper dive. And then I'm going to ask a few questions myself. So Gadi,
Okay.
you get to go first.
Thank you. A little bit about myself. My background is in engineering. I'm very proud to hold a bachelor degree from this fine institution in computer engineering. But most of my career I've spent in sales and marketing. In the crypto world, I started with a company called Spondulistek, which was an Israeli company doing producing mining equipment right here in Israel. And it was quite an amazing ride to get into this industry from the enterprise industry and see how fast things were going. In my previous role, I was selling software to big enterprises. We had sales cycles for 9 months to a year. And in the crypto world, we saw people spending millions and millions of dollars after a 10-minute pitch. It was just incredible to see. So I had the pleasure to do that. But unfortunately for Spondulistek, late in 2015, the Bitcoin price started crashing. and we got into a price war with Bitmain. We were producing hardware here in Israel. They were producing hardware in Shenzhen. And I'm sure you can guess how that ended up for Sponduli's tech. The good thing about that was that we made a connection with Bitmain's founders, Jihan and Mikri, and they came to Israel and saw about 30 startups in 3 days. And they decided that they need to have a local R&D center and tap into the talent here. Bitmain made several investments into Israeli companies, especially in the blockchain field, but not only. We had a mining pool that was operated from here, and we had several other projects that were in the making. Bitmain today is by far the largest manufacturer of mining equipment, and if you're not familiar with the mining field, in general, in mining, people are competing over two resources. They're competing over electricity, which is a huge factor in your operational costs, and they're competing over the performance of the hardware. You want to get as much hash rate as you can that consumes as little electricity as possible. And the companies that are able to provide that hardware have huge rewards to harvest, and Bitmain has been doing that very successfully in the past few years. It's extremely interesting to see how this industry evolved over the past few years, and how from talking about cryptocurrencies we started talking about blockchains and private blockchains, and it's not just the cryptocurrency of it, it's the technology and what else we can do with that technology. I think the next few years are going to be tremendously interesting to see how this technology is tapped into different industry, and what else we can do with it other than just currencies. So I'm very optimistic and very interested to see what's up next for this entire industry.
You got to finish the story, though. for the people who are not aware.
The story ends a bit sadly for Bitmain Israel. Bitmain Israel was shut down last week. But
it's not the end, it's a new beginning.
Yeah, it's a new beginning. It's a new beginning. I think it's one of the interesting things to see was how many companies were interested in getting their hands over Bitmain's engineers. The knowledge that they acquired over the past 3 years is just extremely valuable in the market right now. And I'm happy to say that the vast majority of them are already signed on new employment agreements or on their way. So there's a happy ending to that.
Okay, so I think so maybe a bit of the story of blockchain in the different angle, not on crypto world. So I'm coming from distributed algorithm system space. We're working on clustering, high availability, and scalability of systems for many years. And when blockchain came, I think when Bitcoin and all the crypto hype was there, about 3 or maybe a bit more years ago, IBM as a big company working for enterprises see, I think, the value in blockchain which is not crypto. And I think for me personally it was a great opportunity again to work on something distributed, to solve a new world of problems in my world. But if we look on the blockchain world, it's about to get it started from connecting the world together. So if you look on companies, and maybe it's less academic, but it's also for me very interesting. The companies were like have their computer system, but were like islands, and those islands were connected by some third-party organizations like Swift for finance and some credit card companies and so on. But transactions and things like that took a lot of time. And actually, you don't know. And the most funny thing, I think, some funny examples happened, for example, on supply chain world, where actually there was no connection, even electronic or computer connection. So if you send today something from one country to another, you don't know where these containers are. There is nothing that connects them all together. And I think blockchain came to solve this problem and to say without having someone that will connect all of them together, let's connect them together in some distributed manner, and we will know where things are, and we will get provenance, and we can get another value. I do believe that in that sense we are only in the beginning of the journey. And it looked like about a couple of years ago that those two systems, like permissioned, that came to solve these types of questions, and permissionless were more crypto world, where this kind were very separate, and you are very strict. We are permissioned. We are not handling money. We are just helping things connect together. They are coming close, and I do think that we will see those networks connecting, and we will see a lot of hybrid scenarios, and we are only in the beginning of this blockchain journey. I think we'll get more about examples, but the question about how we build really systems that are scalable and can do real load on this world, and the transactions are fast, are still something that very bothers us, at least.
Following up on what Gadi said, so I too am an alum of this fine institution. I met my fine wife in this fine institution, as did my parents. Kindergarten and my high school are a quarter of a mile away. It's rather astonishing how my life has evolved around this institution. Excuse me? Yes. My condolences. Yes. I used to introduce myself and say my name is Uri. I'm from Jerusalem, and my wife said you should stop. It sounds like you're from it's an AA meeting. I'm not from Jerusalem. So Starkware. So several aspects of the story which I think are of interest. First is the fact that we started just over a year ago, actually a year and a day ago. And we raised money sort of the old school way, equity funding, capitalized on the bubble that was bursting in front of our very eyes in a significant way, and raised $40 million, but notably did not conduct an ICO. To us, this was sort of an obvious move to venture investors. Early in 2018, it seemed like a curiosity, and later in 2018, it seemed old and wise. So that's on the funding side. In terms of our focus, we decided to focus on a permissionless space. It's first and foremost because it's permissionless, because unlike the permission space where you sell to enterprises and you have these long sales cycles, and at the end of the story there is always some deep inherent trust assumption built into the situation, into the technical need. There is a trusted party at the heart of the whole setup. And the existence of that trusted party means that you seem puzzled. When I sell a system to a bank, that bank, we trust it to hold our money. When I sell a software system to an insurance company, we trust that insurance company to haggle when it's time to pay our but there is a trusted party at the heart of the system, and that means that coming to those people and saying, let's enjoy the benefits of blockchains where there's really no need for a trusted party as an inherent part of the setup. This, in a fundamental way, is alien to their whole existence and their ability to charge premiums. And for that reason, we think that the permissionless space is a far more exciting and interesting and innovative sphere. In the context of cryptography, I would add that by design, new cryptography, people prefer to see it sort of tested out in the wild first before they bring it in-house. And the permissionless space could be thought of in that regard as sort of a very interesting and lucrative bounty program. So things like Zcash, which is a cryptographic token which implements a zero-knowledge proof system called SNARKs that offers privacy. Its market cap could be thought of as the sum total of the bounty program, enticing people to try and break it. If you can break the cryptography there's millions of dollars to be had. So for the permission space to observe that and to sort of follow up a year or 2 or 3 years later and say, okay, this technology is mature enough, we can now bring it in-house into the permission space, I think is sort of the natural way things will flow.
So my background is I'm a serial entrepreneur. I'm most known for creating Farmville. It was 50% of Facebook traffic. We sold it to Zynga in 2009. Basically, we became the technical infrastructure for Zynga. And I got into crypto around 2013, 2012. Back then, there was a bubble too, and it crashed, and it seemed like the end of the world. In late 2016, I I realized that all over the world, people were legalizing cryptocurrencies as a commodity. The CFTC in the U.S. I'm from Silicon Valley, and I noticed there was basically new cryptography primitives like ZK snarks, as well as generalized validation on chain. So, and then all throughout kind of about 2016, 2017, I basically my background is distributed systems. Basically that's my kind of what I studied in undergrad as well as part of what I did in grad school, and and decided to more focus on it as a career rather than just investing. So now somehow I ended up in Israel. So as you can clearly see, basically yeah. Well, basically I was. It's a long story, but basically I started tweeting out, basically and blogging a lot of my thoughts, and I, gained 29,000 followers in 2017, and people basically started seeking me out for a lot of different things. And then as a result of that, I got introduced to Jonathan Sopolinsky, who was the author of Ghost. It's cited in Ethereum white paper with Aviv. And while I was on my honeymoon, I decided to come over here. So that was basically around June, and we kept on talking, and then I ended up in Israel basically around September or so. So, as you can tell, I'm not from around here. So, and my observation of 2017 was the following. Basically, Ethereum obviously caused the bull run, and it coincided with the end of the quantitative easing market that's in the normal market as a result of quantitative easing, as well as the Federal Reserve rising interest rate. Typically, usually with those bubbles, you have a shadow banking system that basically is a result of that. In 2008, this was known as the subprime crisis. In 2001, this was known as the dot-com bubble. And in 2017, this was known as crypto, basically non-productive assets, ERC-20 tokens. But what I found that was basically interesting was that for the very first time, you can see the emergence of a financial stack. Call it basically the emergence of composable primitives on-chain that can basically enable kind of productive assets. Even though, right now we're basically in the middle of a deleveraging kind of a bubble that is crashing and potentially could crash even further, just like the dot-com bust. So non-productive assets on-chain, composable financial primitives and cryptography on-chain, the use of the establishment of a crypto-to-crypto trading, which everyone derogatorily says is used for speculation. It's true, but you could argue that for the very first time, you basically have the infrastructure, a global internationalized financial infrastructure that can basically provide the railing for other type of things. And then you basically saw both the benefit as well as the detriment of generalized validation. So if Bitcoin and UTXO-based kind of systems was domain-specific validation, call it debit and credit validation, Ethereum basically tried to do generalized validation. And the problem with basically generalized validation is that there's a tragedy of the commons problem, where you put too much constraints on chain, and so in general, so you have full composability, and you have full use of the chain, but you basically don't. You basically have multiple problems. You have a storage problem, you have a computation problem, you have multiple kind of problems, as people basically found out. So what we're. Are you
referring to Ethereum performance problem?
Yeah, I mean, you're right. Like, for example, in order to sync a chain, basically you start a full node. It's basically 1 terabytes, and because of the way they designed the storage, all contracts, all storage. You can call it like a TI-82 calculator in every single node, basically, and then you basically compute and validate basically everything. And so it's great that this proof of concept was able to show the power of composability, but in something that's basically that requires so much security and decentralization, it's not quite the right architecture. And then with Stark and Snarks, you basically see the power of zero knowledge, the performance basically increasing, so probabilistic computation and other things. So there's a lot of things that are basically happening that basically people don't basically see under the hood. Basically there's always like with every, if you look at Carlito Perez's kind of a framework of technology bubbles and financial bubbles, what you basically see with every bubble is there's some fundamental truth that are basically too early. Basically you saw that with basically the .com bust as well. Basically people saw the .com bust as an indictment that all the ideas didn't work. And there was a famous board game that basically said all the stupid ideas of the .com bubble. Social networking, social games, basically buying grocery on demand, basically buying e-commerce. So if you look around basically that board game, it was like a Monopoly game. Basically all of the game described, all of the squares described Uber, Facebook, Instacart, and all the things that succeeded 10 years later. So when I basically see kind of, basically this .com kind of boom, I actually see much promise. Basically because it's just indication with the airplane, with the automobile, you basically have a lot of these similar echoes basically happen. So anyway, basically, I don't want to basically hog up majority of the time, but effectively, basically, Phantom and DAG-based scalable systems are simply basically the starting point. And what I find basically interesting is you increase the performance of zero knowledge, you increase basically the capabilities. What will you basically get? What are the fundamental truths that you'll get 5 to 10 years later?
You actually surrounded yourselves with 2 zero-knowledge proof industry actors. And the question of, so I'm, again, Jonathan Rouach. My history is, I'm the co-founder of Bits of Gold. So I don't know if any of you are clients of Bits of Gold. Pay your taxes. This thing is like the legit way of doing cryptocurrency. We started in 2013 and made it, made very sure that we're playing by the book. We wrote the book on regulation in Israel and play by it. And then back in 2014, we did a spin-off that was a security company, security of cryptocurrency, and that was acquired by Digital Asset Holding. Digital Asset Holding is this huge, I don't know if to call it startup anymore. They're deploying a blockchain in the Australian Stock Exchange. Our former CTO is the CTO of Digital Asset. What we saw there was exactly this split between the world of cryptocurrency and that world of enterprise blockchain that later evolved and grew a whole industry of its own. And that's around the time, so the question of timing is really important. Around that time, we could already see the issues of that core blockchain technology. So there was issues around scaling, privacy, how do you integrate it with legacy systems, and we had an idea to go back to Israel and start something like a research center for applied cryptography and blockchain technologies. That never happened as such, but from that initial idea, there's a series of companies that were created in Israel that are covering those aspects. So zero knowledge proof clearly at the center of both QED-it. So QED-it is this third company that we founded, solving the problem of privacy for enterprise blockchain. Zero knowledge proof also at the heart of scaling and privacy with Starkware, and then scaling itself addressed by Daglabs. There's a whole industry that's now the evolution of those initial blockchain ideas, covering different aspects. So yeah, cryptocurrency, bits of gold is still very much striving, but now those different problems that we need to solve, we need to focus a lot of creativity and attention to solve them. To give a concrete example of the problem, we're now talking to banks. Banks cannot adopt directly a private blockchain, a blockchain that basically means that you send your transactions to all the other nodes in the system. Goldman Sachs will not share their data with JP Morgan. And it's nice to have a feature of everybody looking at the exact same ledger and coordinating between parties. But if it's at the expense of sharing your confidential data or the data of your clients with other parties, this is not going to fly. And for years, there's been a machine hyping up blockchain and hiding those aspects or pushing them to, yeah, that will be solved later on by some advanced systems such as zero knowledge proof. But pushing it down the line doesn't mean that we don't need to start working on those systems right now. And so in 2016, we created QED-it. Disclosure, Aviv is a co-founder of QED-it. And the third co-founder is a partner that also co-founded those two previous companies. 10 years at McKinsey, very process-oriented person. What we set out to do was create this a technology that we can apply in enterprise systems as soon as possible to move from blockchains that share data to blockchains that share proofs about the data. So the core of the technology, zero knowledge proof, is a way for me to prove things about data without having to share the data itself. It's a fascinating piece of technology. I was actually exposed to it by Professor Eli Ben Sasson, the co-founder of Starkware, back in 2013 in San Jose, one of the largest Bitcoin conferences, the first Bitcoin conference that reached a big scale, like 1,000 people in San Jose talking about Bitcoin. And here came a group talking about zero cash before Zcash existed. How do you move from transactions that everybody sees to tokens moving around where nobody sees any transaction, but I can still prove to others that I own a token, that I moved it according to the rules. So I'm applying the rules on myself and proving it to others. And that idea of separating the proof from the underlying data blew my mind. It's a shift on how you can collaborate with other parties. There's so many situations where somebody is asking a question to you. You don't want to share the data to prove them the result. And they don't actually want the data. To give you an example, credit scoring. When I want to prove to a bank that I'm worthy of credit, they don't really want to see my data. They want to run their formula on my data and see that I'm credit worthy. And I want just their credit. I don't want my data to be shared with them and then going everywhere. So that core capability of proving to someone my credit score, self-proving, in a way, self-auditing, and giving a proof of the result without having to share the private data, that's a capability that's now maturing and being deployed in live systems.
All right, thank you. So So I have a question. Maybe I should comment that this audience has been hearing quite a lot of talks about the technical aspects of blockchains, and we're focusing a lot on Bitcoin and public cryptocurrencies and on the theory. A lot of what we were missing, and this I guess is the main reason for this panel, is a lot of the business sense. What happens at the end? Why are we constructing these systems? How do they change life for everybody in the world later? So would somebody want to kind of venture a guess or like a long-term prediction? How much of the blockchain hype is going to materialize? What is going to be the long-term impact of this shift in the industry? How much is a bubble? Only up to you if you want to answer. Okay.
So I think that to answer that, we first need to realize that there's a big problem with blockchains today, and it includes cryptocurrencies, it includes private blockchains, which is that it sounds great, but there's very little real-world usage to it. I'm not well familiar with private blockchains, I have to admit, but I'm not familiar with a lot of these systems that are in production today. There's a lot of talk about it. I hear a lot about POCs going, but maybe Vita can comment on that. With cryptocurrencies, we see that there's a real issue, and we actually see the wheel kind of going back. In 2014, 2015, we had a lot of merchant adoption of cryptocurrencies, and we went back on that, and it doesn't seem like the trend is going to reverse anytime soon, unless there's a specific paradigm shift in how people conceive of or how people think of cryptocurrencies. I think that the bubble that was mentioned here several times of 2017 changed the way people think about cryptocurrencies to be less of as currencies and more of as assets to be held and not used. So I think that there's an underlying problem here that needs to be resolved or addressed for us to really move this industry forward. So before we can talk about the future, we need to figure out how we change that and how we resolve that.
So about adoption, I think we are in the beginning. There are production systems today that run blockchain. We have one with Myers and IBM for containers. There is one for Food Trust. There's a big system with a lot of participants. The load of transaction is still not so big, and we have a lot of POCs, us and many other companies. I think there are a couple of things that make this slow, the move slower than many of us maybe would like to see. One of them is because to adopt it, we need to create a network. In different to permissionless world, where you go out and you open this network, in permissioned world, you need to, it's not like to sell something to one customer like an enterprise company. You need to connect all those banks together, and they need to decide to bring the system up, and it's a complicated thing. So it takes time to move this. Another thing, I think all these private stories and all other parts are very important. And when you start to work, and when we started our project, which is Hyperledger Fabric, by the way, all of the blockchain projects are open source. At least most of them I know about. So if anyone wants to work on something, you can just, open and work on it. You learn when you start working on it that you need privacy, you need things like zero knowledge proof, you need a lot of separation. It's not just one big ledger that everyone sees and this is a happy end. This is a this is a start where you think what you can achieve, but then you start working. So I do think we will see growth of blockchain and adoption, but those systems are still immature, at least from our, and that's why we see more and more people playing. We do see some start for real system, but it will take time when those systems will. And I think, we as more, we as know how this technology is built. It's not that we can, change the Visa transaction system to go over blockchain today. It's not the same level of throughput and performance it gets. So we'll see how it goes.
So I wanted to try to have some discussion, if it's okay with you, on that question of public blockchain versus private blockchain, because I'm really, really interested in knowing the opinions of everybody here. There's this debate on whether permissioned blockchains are even blockchains or are even useful, because they don't have the original spirit of Satoshi. You know, it's not walk in, go, put up your node, don't ask questions to anyone, and just participate. It has this governance element that you described, where people need to come together and decide, okay, it's like an intranet that you need some form of outside processes that happen in order for it to succeed. Arguably, this is also the case for public blockchains. It's just that it happens in those Vitalik circles where the governance has a lot of impact on many people, but then it's those decisions are happening in a little bit closer circles. My observation here is that you can already reap benefits from distributed systems that apply cryptography in a way that reminds of that original blockchain vision. So it's a long sentence to say we can use parts of those ideas in systems today, and what we're trying to do is accelerate that. So bring more advanced cryptography to solve all those roadblocks to use it today. So concretely, why call it blockchain? Well, it's a great way to raise funds. Great way to raise funds. At least back in 2017 and before. But also, sincerely, I think, in the case at least of QED-it, we're trying to solve a problem for the blockchain industry. We're moving to zero-knowledge blockchains, and it's applicable to open blockchains as well. But those places where you can start experimenting and bringing value between companies that don't want the additional matter of tokens. So some companies, believe it or not, actually want to run their systems and reap the benefit of collaborating regardless of a token flowing on that system and speculating on the token. And then those companies would like to have solutions where they get together, they deploy a distributed network and start getting utility, getting value, disconnected from the possibility of anyone walking, joining, or miners mining, etc. So I repeat the question. Isn't blockchain the idea of solving the Byzantine problem, Satoshi style, or something reminding that? And then if not, why do you need this in a enterprise environment? And again, I very much would like to be challenged. Maybe.
So I think that's an excellent question. And when we're approached, every so often we're approached by enterprise folks, and because we're not terribly interested in the space, we're in a position to ask, rather boldly, why are you here? Why are you even interested in what we're doing? And what is that canonical use case that you want solved? And invariably, what we hear is that there's a whole set of trust assumptions, and we say, well, these zero-knowledge proofs are very expensive computationally, and it's quite the headache. So if you have all that trust in place anyway, have a bit more trust in the other partners in your permission network. And there are all sorts of game theoretic arguments why it won't pay off for the other guy to cheat you because there is repeated interaction and so on and so forth. And just and do without zero knowledge proofs. In the permissionless space, it's a very different story. You don't know the identity of the other nodes, and thereby, by design, I think it's very important to sort of appreciate the fact that it is fundamentally, it's the permissionless nature of these networks, which the scalability and privacy are immediate casualties of the permissionless nature of these networks. Meaning, the fact that a fellow node conducted some computation and I now need to verify that work, because I know nothing about that other node, because I know nothing about their identity, etc., the only thing left for me to do is to essentially re-execute the computation. To the extent there were private inputs into their computation, I need to see those inputs in order to verify the work. So scalability and privacy are two immediate casualties of the permissionless nature of these networks. The thing is, and Ben Horowitz from Andreessen Horowitz said this beautifully. He said, in the context of this discussion, he said, the trade-off is potentially doing away with trusted parties. On every conceivable metric of computer networks, what we have now in the permissionless space is far, far worse than anything we can do, we've been able to do so far. And the question is, can we close the gap? And is the absence of a trusted party in the sense of its impact on the way economic motivations are sort of rebalanced and reshifted, is that enough of a motivation to get these things in motion? So I think we'll see over the coming years.
I think, does anybody want to defend permissioned blockchains again?
Yeah, I think, and I think this is a good point about trusted parties. I think this is the main difference between the permissionless and permission. So we still have a network between parties. It's not one organization that run blockchain, because I am in agreement with you that for one organization you don't need it. But if you have a number of companies or a big number of companies which know identities of one another and are trusted in some way, but they are not fully trusted and don't want, they do want agreement, and they do need sort of things that one ledger that you cannot change will provide them. So they don't. It's not that they share everything, and like in the banks, scenarios that Jonathan raised. And no, I don't think that in blockchain definitions, at least in our view, we always think about indefinite number of untrusted parties that want to get an agreement. The setup is different, but you still have different parties that want to agree on something. They have different parts in mind.
Good question. On permission blockchains, so how does Capitalized Fabric, for example, solve double spends, if at all? The double spending problems.
You have smart we have smart, so you have it in the consensus algorithm, and you have smart contracts and endorsement policy. So we avoid them. It's the same, in similar way, in the different way of consensus that we do, but it's also consensus algorithm. So consensus in Hyperledger Fabric is split to two parts. One is endorsement piece, and the other is a physical consensus on the order of commands. But we avoid double spending in Hyperledger Fabric as well, without mining. It's just different.
With traditional BFT style consensus.
Mm-hmm.
I want to send the other microphone there because you guys need to be talking more than me.
I have a concrete example.
So move the mic to John.
So just as an example, there's a large auto company, car manufacturing company that we pitched to, and at the end they said, okay, this is really interesting, but my engineers tell me that they don't need blockchain. They can do without blockchain with a centralized system. For the use case that we had in mind was managing their supply chain. So they build cars from parts, and they want to make sure that their parts arrive on time, that all their suppliers are in line, and will provide the parts that they need to have their manufacturing succeed. And my question to that person was, do you cover, with that centralized system, do you cover all your suppliers? And he said, no, actually, one of the big suppliers in that chain works with the competing system of our competitors, and they won't move their data to us because it's too much. They manage their systems with another competing system. So you have for that car manufacturer, yes, they can follow parts of the supply chain, but then there's a gap because they cannot, the parties cannot agree to share their data in a central place. So the next logical step is, how can you ensure that you have visibility on the entire chain, but without having to everybody to put their data in the same system? There's no, it didn't arrive so far that there's a system that everybody is willing to trust to put their data there. So in this industry, the car industry, you have people building parts for different car companies, and car companies buying from different suppliers, and they don't have a natural place to put all their data and manage in a centralized way their different supply chains. How do you deal with that? And one of the solutions is, okay, so we're not going to have that central place. We're going to build a distributed system, but we can't just have it on declarations of each party that their data is legit. They need to prove it. So the naive way to prove things is to share your data with everybody, and the more advanced way to prove things is to generate proofs on the data.
I think you answered why you don't knowledge protocol might be useful in a more partially trusted setting, but that doesn't really answer what blockchain. I mean, everything you just described you can put in a centralized.
No, but you as an organization own your data, and let's even if I want to share my data on request to someone before zero knowledge and other parts, but I don't want to share it to everyone, and I don't want to trust someone to host my data. So you create sort of a network, and I will bring you to the ways that this blockchain is. You create sort of a network between organizations that we want to do sort of some subset of commands and be able to share data information between different parties, like
in an
in
immutable way.
Like in supply chains. And there are two options. Either you put it in one central place, and someone will host this place, and you fully trust this someone, or you create sort of a network. And then you get to parameters of this network, and it can be different parameters.
I'm not disputing the usability of the private blockchains, but asked about a specific example that seems to be centered around proofs. I don't see how blockchain fits in that specific story.
So just as to touch on the technical specific, what you want is a way for suppliers to prove things, but not be able to modify their state, their previous state. So they commit on their own private state, and then after they committed, they can prove things about that state, and you need to make sure that they cannot alter their commitment when it suits them. So concretely, imagine a token that's a digital twin of a physical good. I am at an assembly line. I got, in order to assemble something, I need 3 parts. I have 3 tokens coming to me that represent those 3 parts that came from other suppliers. This is all secured in a zero-knowledge blockchain, so nobody can see those transactions, but I can prove that I received those 3 parts. I have a logic that will prove that I consumed those 3 parts and produced the new part that I will now sell further up. All that logic, as Vita said, it comes, at the end you come to the necessity of building something really similar to distributed ledgers and what we call a blockchain.
I think the conversation got detoured a little bit toward ideology, basically, so I want to basically comment on the use cases of blockchain. I can't believe this is controversial, but I think blockchain actually has a very strong product market fit. It's one of the strongest product market fit I've ever seen. Product market fit. Are you familiar with that concept? Okay, so it's
Conscious business.
yeah. So in Silicon Valley, like you see these massive trillion-dollar kind of networks: Facebook, Apple, Amazon, and there's a couple kind of phases on these networks. The first phase will a small amount of niche people basically adopt it ferociously, intensely, and so that's called product market fit. With Facebook, it was Harvard. With Yelp, it was San Francisco. With Apple, it was basically people creatives. Basically like with all kind of these things, you have an intensely group of loyalists, and then you radiate outwards. Basically progressively to other networks, kind of like a viral infection. In traditional Silicon Valley kind of terms, this is called pre-product market fit, and then after you basically get a bunch of intense people, and you basically say, okay, this is the deductive reasoning. Okay, basically this is this proves that this works, and then you prove the inductive case. You prove the n+1 case, and then once you prove those things, then you basically say, this is my series A, this is my series B. This is basically called the growth round. Basically, and then you go until you go public, or you basically grow to $40 to $50 billion. That's Uber, Lyft, all these things. So there's two phases, basically, like pre-product market fit, post-product market fit. And there's a common kind of perception that basically, which I think is wrong, basically is that Bitcoin is basically doesn't have product market fit at all. There's two economies, and the often used case is basically I can't buy coffee with it. Basically it's not a currency. No one else around me basically uses it. And this basically completely misunderstands the role of the economies. There's effectively two economies. One is the financial economy. The second is a services and good economy. The financial economy is supported by the central banks across the entire world. Basically this economy is basically primarily basically dealt with people that own stocks and bonds and the capitalist class. Call it the top 10%. Not the top 1%, but the top 10%. Upper middle class, professionals, New Yorkers, Londoners, Hong Kong, Singapore, basically financiers that basically deal with the capitalist class. And then you have the services and good class, basically, and what people basically commonly known as money is primarily credit, basically, and so the cascading basically effect of the economy basically works like this. Basically, it's the central bank that gives money to the financial class, and the financial class affects the services and good class, basically, in the last thing. And so I would argue basically that if you look at basically Bitcoin, it's if you look at the underlying kind of blockchain metrics, it's gaining adoption at I would argue a frightening rate, and its addressable market is the Swiss banking system. The offshore banking system is on the order of $25 trillion. Basically, so if you basically just compared it as a normal startup, and you said, basically, how has this done as a normal startup? Regardless of the volatility, you would be astounded. But people basically have recency bias. So therefore, you basically say, oh, it's $20,000 and went to $3,000. Obviously, it failed. Neglecting basically all the 5 other times that it supposedly failed in the last 10 years, 10 to 20 years. So where I basically see basically blockchain, I see the only use cases, basically being public blockchains, basically, and it basically disrupting major institutions. Bitcoin disrupting central banks, and effectively basically the Swiss offshore banking system. Total addressable market is $25 trillion. Basically, and if you look at underlying kind of UTXO based analysis, it's basically its fundamentals are very healthy. It basically just passed OTC gold market, London's OTC gold market. It passed MasterCard in transaction volume, and then the second use case is basically a securities platform, otherwise known as Ethereum, and then the third use case is commercial and merchant banking, otherwise known as MakerDAO. Basically, people think it's a stable token that you basically deposit assets in. It's basically the only layer 2 that really works. Lightning Network basically has $1 million deposited. MakerDAO has $150 million of deposits basically in 1 year. You could MakerDAO, basically, and so so when I basically take a look at kind of what's product market fit, I don't basically take a look at people basically around me. I basically say, what are basically examples of intense loyalists that basically have intense product market fit, basically, and I would argue basically it already has product market fit, and I strongly disagree with basically the fact that it's just speculation, and certainly there was a lot of speculation and a lot of people got hurt, but this happens every 10 years, so and then going forward, I would basically argue that the key use cases are disrupting a lot of the fundamental assumptions of basically the institutions that people take assumed. Basically, so one is basically central banking. It's very likely that we're going into a liquidity crisis in the next 2 years, 2 to 3 years, and we'll see how basically Bitcoin does in that case. And you see basically the rise of people in Turkey basically being interested in cryptocurrency because the lira dropped by 40%, and this is a Western country, basically, and so we're likely going to basically see major institutions basically being targeted, basically. So in the U.S., basically a lot of the traditional banking system is and mortgages is based on basically Freddie Mac and Fannie Mae, and they effectively created all the financial instruments and dictated on a centralized way basically how financial instruments are basically created. You'll basically likely see a lot of the underlying assumptions with these major government institutions basically being targeted. And so what is basically crypto networks? I think crypto networks are basically articulation of crypto networks. Basically Lyft is a centralized tech network, basically, and where you have supply and demand, and basically people demanding, providing supply and demand. I basically see it as, first starting in the financial economy, and then moving into the service and good economy. And so where you'll see normal people basically using it is probably 15 years from now, basically, but the intensity of the aspect are probably around 2 specific kind of areas. You have domain-specific validation kind of networks that have strong product market fit. Monero, you have Bitcoin.
What's the Monero validation?
It's privacy kind of coins within the darknet. So it's and then it's the only one that's used, not really Zcash, and then you see basically sorry, I lost my train of thought. You see Handshake DNS basically providing proof of work, disruption against ICANN. ICANN is basically the top level domains. Basically they're trying to replace basically how the DNS kind of system fundamentally works. And so when you basically see, basically like what can work, you basically see very specific domain-specific validation targeting very large institutions that people basically, assume to be trusted, and create coordination kind of games and community-based kind of systems to enable basically it to develop. And then you have, basically generalized validation, basically, and where people are trying to basically figure out the trade-offs between scalability, composability, and privacy and scalability. And this is basically known as like, Dfinity, Hashgraph, us, basically like, kind of we're basically trying to figure out kind of the right trade-offs to basically enable the right use cases. So I strongly disagree that basically blockchain has no use cases. I don't think basically private blockchain has any use case, in my opinion. Basically I think zero knowledge for enterprise is very interesting. And yeah, so I just wanted to interject. My comment is...
So I want to take us in a slightly different direction, maybe. So there was an ideological discussion. I really want to I want to ask you guys as people who are either running companies, some small or within large companies, right? We've been experiencing this, volatility of Bitcoin, the bubbles and the crashes, etc. So in some sense, people say it helps us work quietly when everything is down. Maybe we raise capital a bit more when it's up. So I wanted to get some perspective from a bunch of you on how it's affected things you were involved with. And maybe the first one I want to hear from is actually Gadi, because if Bitcoin is a gold rush, what I like to think of Gadi's past activities was that in a gold rush you want to be the guy who's selling the shovels, and so you don't care if the bubble maybe goes up or down, and maybe you were sometimes surprised by some of them. So I want to hear from you a little bit about that.
Okay, so definitely the metaphor holds, I think, and the selling mining equipment, a lot of time customers would ask me, if the equipment is so good and the ROI, the return on investment is good, why are you even selling it? And the real answer is that if we put a mining rig into a mining farm and we get the cost back of the machine within a year, we just have the capital lying around there for a whole year. Whereas if we sell the machine, we can take that same capital and build another shovel and sell that other shovel the following day. So by selling the mining equipment or by selling the shovels, we can increase our manufacturing capacity a lot more. The mining world is definitely affected by price, and it's affected in a way where the price goes up, there's never enough mining equipment to go around, so the demand is just exponential. And when the price goes down, even if it's still profitable to mine, the demand for equipment just disappears. And it's very counterintuitive to the to let's say the smart investor, because when the price goes down, the mining equipment price also goes down, and the opportunities are there. But the mining industry or the selling the shovels is definitely very, very affected by the price. I think what Bitmain did very, very cleverly that Spondulis Tech, for example, didn't do, is be able to take those bad times when the price goes down and put those machines to mine while the price is down, waiting for the price to go back up. So where we in Spondulis, when the price went down, we just had the machines lying around and we had nothing to do with them. Bitmain was able to put those machines into use and get at least some of the money back, and then sell them as used miners, or when the market goes up, the value goes back again. So in the mining world, when you have those price fluctuations, you need to be able to build that buffer to withstand the bad times. But as was said here, the cryptocurrency industry is very, very volatile, and we see a lot of these ups and downs and ups and downs. And the companies that are able to power through the bad times do reap the rewards afterwards. We saw that with 2017. Any company, not just in mining, any exchange, any broker, any miner that was in the industry in 2017, anyone that was able to get through the 2015 hard times, reaped the rewards big time in a way that even companies like Coinbase couldn't handle the growth, and we're still seeing the impact of that growth. So Coinbase, for example, is still hiring new customer service representatives to fulfill the increase in demand that it has over 2017 and 2018.
I wanted to comment on this. This is the third bubble that I'm seeing sort of pop. In 2000, I just had the good fortune of just observing it from up close, but not being subjected to it. 2002, the optical communications one, that was far less fun for me personally, and this is sort of my third. There is very little. It's no fun, right? As an entrepreneur, I can say that it's much better being on a Kontiki kind of vessel than on a steamliner. Those get, entire divisions get slashed Someone in the U.S. decided to shut down an operation of 1,000 people here in Israel, and the next day everyone is out of a job. If you're a team of 15 or 20 people, you control your destiny, and then you're far better positioned, in my opinion, to navigate these high seas. So that's sort of my personal bias as an entrepreneur. I commented on this earlier. A lot of the projects in the blockchain space that minted tokens that had an ICO, I think, failed to appreciate the extent to which this exposes them to an environment with these very violent price fluctuations. Because if the price of your token, you raised an awful lot of money. First of all, there's the question of if you raised it in Ether and Bitcoin and those dropped by 90 or whatever percent, what happens now to your project? If you had the good sense to convert that to greenbacks because that's how you pay your salaries, you're better positioned. But now your token is you've effectively gone public, okay? And not necessarily in the regulatory sense, though the SEC now has a few comments on that as well. But from an organizational perspective, you've gone public, meaning there is a single metric that your employees and your partners and your customers and your investors, they're all tracking. And now you are busy explaining to them why the fact that it dropped by 90% or 95% is in fact of very little consequence. And in fact, we're doing much better than we did 6 months ago, and everything is just hunky-dory. Now, if you can shield yourself from that, then hopefully you can weather the storm. That's what we're hoping to do.
I generally think bear markets are the best time to be building things. If you look at kind of there's some analysis basically that Sequoia Capital has done on unicorns by year, and then layering it onto bear markets or a bull market. It has no correlation whatsoever, and generally speaking, the bear markets flush out all the weak companies, which I generally think is the best. And the thing that's interesting about this bear market is the amount of the fundamentals that's different. I remember in 2013, there just wasn't enough people, basically both to price Bitcoin on a fundamental basis. So there's a perspective in finance basically that commodities are priced, companies are valued. So companies are basically valued based on price-earning ratios, and commodities are priced, meaning it's just a function of demand. And there's a lot of research that's coming out, basically that's saying, effectively, no, Bitcoin is actually a function of it's going through a Metcalfe's law. Basically, Metcalfe's law is effectively the more useful. For example, if you had the first fax machine or you had the first cell phone, it's not very useful for you. Basically, but every incremental person makes it incrementally useful. And there's a bunch of people basically doing a lot of analysis to basically derive the P ratios for a lot of these public kind of bond networks. So what I basically find comforting in the bear market is effectively shattered a bunch of teams, and these teams had no business doing what they were doing anyways. So this is just the same in Silicon Valley. 90% of companies fail. It doesn't, except this is in a very public way, basically. So I like that the weak teams are basically flushing out. There's people are still raising money, and there's still a lot of nothing's dried up, and but it's only for good teams. And then number 4 is there's a lot of fundamentals to be very optimistic about, basically. So in fact, I actually think it's one of the best times ever, basically. Generally speaking, they're just saying, right, basically because human beings are mimetic animals, where you basically you follow the herd. Basically, generally speaking, your reptilian and limbic brain tells you basically when something's down. Therefore, everyone is, there's a social consensus aspect to it that basically says, basically this is bad. So effectively this causes people to buy high, sell low, and I think basically the best way is to buy low, sell high, basically, and that's actually, I mean, it's not controversial in finance, but but that's the underlying premise of the question. Basically, when you buy an asset and it goes lower, do you reevaluate your thesis, or do you declare the industry dead, or do you basically? And my opinion is basically, the fundamentals are better than ever, and you buy low, sell high, and you flush all the tourists out. So.
You can maybe give another spin on this from the Bits of Gold perspective.
So before Bits of Gold, just Bits of Gold is doing fine. Before Bits of Gold, the approach that we took in QED-it is the technology that we're putting out there has been considered as moon math and moon technology, and people wouldn't believe that we'll be able to standardize this and put it in a product. And it's so experimental in the minds of people that to add to that technological experiment, the experiment of governance of a company, going with ICOs and trying to have models based on tokens moving around and doing what's equivalent to an IPO without saying the name, that would put any entrepreneur in this combined state of trying to deliver their promise, but also trying to run that experimental new way of getting funding. And what you end up seeing is people focusing, it's so demanding that other part, you're in front of all your investors with huge swings, you're in front of the regulator, people end up talking about their Gibraltar entity and their foundation and all these new things that just set you away from talking to your clients, asking what they need, building it for them. Yes, it's amazing new technology, and that's enough of a challenge to bring that in a product form, to be adding this whole new noisy aspect. Now, wearing my other hat, that noise is awesome when you indeed sell those shovels. So when you want to convert to Bitcoin or out of Bitcoin, there's a company that Bits of Gold, because we've been doing this by the book, we're the only ones that are left there, and the banks didn't shut us off. They tried, we went to court, and the judges said they're doing it legit. There's no reason to shut off the account, which means there's just one company that has a bank account that serves this entire Israeli industry. So that comes with the responsibility of staying alive for a long time, even in these markets. It's really the lifeline of many clients in Israel to touch back Israeli shekels in their bank account. So the joy and activity of crazy growth of 2017, which was extremely painful because nobody should go through such a growth in such hysteria way. Like it's not manageable for a company to be in such a bubble at the center of this bubble, and the fact that companies went through it and survived is something else. It's extremely difficult to scale when under such intense demand. Coinbase themselves shut off several days. But then there's the added responsibility of staying there for all those people who want to be able to exercise or to move from crypto back to Israeli shekel, or to profit from the opportunity and do the opposite. And I'm not giving any comments on that. Like the buy, sell, do whatever you want.
Yeah, I'm going to open up for questions in a little bit. I just want to maybe ask my last question. I want you to look at the room for a minute. There are a lot of students here who are looking for interesting research problems, are eventually considering maybe going into the market and working at companies that maybe are in this space. And my question to you is, I'm gonna pass the second mic. And the question is, what is the advice that you want to give them for the short-term research, maybe long-term? Hopefully, some of them stay in academia. That's me under one of my hats. Right. So, what is the best thing for them to do in your view? Right. We've been giving our advice all the time as academics, as advisors, etc.
I was a co-founder of an MIT spin-off back in 2000. Of the first 10 people, 3 are today faculty members at MIT. One is a physicist up in Montreal. I think we live in these exceedingly interesting times where there's a lot of very exciting research going on in industry, and in a way that may not have existed a generation ago. And I, for one, find this transition between research and market to be a very engaging phase for me to focus on. And so we're recruiting people coming out of masters and PhD and very few undergrads, with the promise of presenting them with very difficult problems that are now, for the coming years for us and the stuff we're doing, oscillating between research and engineering. And that's a feature in my mind and not a bug, in the sense that there are going to be all sorts of breakthroughs on the research front, and then the whole thing is going to be engineered up to some point, and then we're going to hit a wall and say, okay, let's take a step back and figure out, there's some more research that needs to go into this. And so we're looking for people who are, I think of them as bilingual, in the sense that they're very strong mathematicians and they're very strong engineers. The intersection of these two communities is much smaller than one would hope. The proletarian engineering world, people who have no appreciation for O of notations, is vast. And mathematicians who frown upon, any mention of, any real life constraints, you find those as well. So we're looking for people who actually are happy going back and forth between these worlds. And I want to say we publish and we intend to continue publishing. In the world of permissionless blockchains, this is by design. This is not some. This is not by happenstance, because in the world of open source software, being able to say we are a center of excellence in knowledge and innovation in this field, and come to us because that's where you'll find all these things, that's a very important signal to send to the market. And so that's something that we have been doing and intend to continue doing in the years to come.
So I think a couple of things. One, the world of blockchain is, at least in my view, is open source permissioned as well. So I would, I would think that the great thing to do is, in complementary to all theoretical things, is to try. And you can try with Bitcoin, Ethereum, and you can also try with Hyperledger Fabric, and you can see how it works. And this is, I think, one of the advices I would, give. Another one is in terms of distributed algorithms. I think it's very. It's a great time where things that seemed like very theoretical, like Byzantine fault tolerance, become more and more practical. And I think we don't see now the answers. So in terms of scalability, there are many aspects of scalability. And while permissionless usually look on the size of networks, I think we try to solve both the size of consensus groups, which are not so small, but also the throughput and the latency of the transactions. And I don't think we are in the point where we see, good implementations of BFT consensus somewhere. we see a lot of academic work. We still don't have something like Paxos where it's implemented in the industry for many years and we are running it in many systems. So I join you in saying that we are in the same position where we need skills in distributed systems, algorithms more even, and the engineering skills to see those skills are built up and see them in production. And I do believe those will be enablement for the real systems to come. So by doing theoretical part, but also trying to see what are the real problems of this system and try to build them, this is where the winner will be, I guess.
So I will give the contradictory opinion. I agree with you guys, but I have to give the contradictory opinion, right? Peter Thiel will probably say, quit your studies, go and open a company, because he's actually paying people scholarships to do this, right? Vitalik Buterin, I don't know if you know this, is one of these people that I think Peter Thiel paid to leave his school and stop his undergrad, and he built Ethereum, right? So we have an anecdotal success here. Obviously, I maybe the group that's sitting here, I invited these guys, so there's a bias. They're all serious people who are doing deep tech, right? Some of these companies were spawned from academic work, from papers, right? Some maybe from the necessity to speed things up more on the engineering side, but everybody somehow uses a lot of deep technology. That's not always the case, right? That's not all of the industry. So maybe, I don't know, are we a biased group here or not?
Yeah. It's exactly the case that it's a new era where people coming from the academia can leverage what they did so much, and it so happens that in Israel, in this geographical space, there's so much happening that's at this intersection of many fields. I don't think there's ever been a time where cryptographers had such high demand on their applied skills. People that could combine, like you said, bilingual people were so much in demand. I think the fact that this ICO wave passed means that that demand is also met with reasonable career paths that are not just a bet on a bubble. People can look at switching from that world into industry, and look forward 5 to 10 years and see where it leads. And the beauty of it is that when those projects are open source, when you look at the details of the different projects, the people that are fit for the project recognize themselves. So they look at what's happening and they say, this is where I want to be working. This is the team that I want to be surrounded with. These are the people that I'm going to learn for my next phase. And what's common to all the types of problems is that they're very hard. You're at the edge of what's known to be possible. So it's not. It is in a way applied research, but there's a pull from the industry. The new message is that there's a pull from the industry to come solve those problems. There's an urgency to solve those problems because people have been betting on blockchain for some while and want to see results now. So they're looking for these skills to solve those problems. So the joining the appeal of my peers, you guys know where you want to work if you want to work.
I'm going to give the contradictory opinion on that one, if I may. If we look at other areas outside of blockchain that have a lot of buzz around them, like deep learning or things like that, you have companies like Google and Facebook that have very deep pockets, and they'll have researchers sit there for 5 years and just do pure research, and that will be fine. In our industry, unfortunately, we still don't have those companies. I don't think there's anyone doing pure research on blockchain, like just research. It's always applied research. And that's the hard truth of the industry. Because of the volatility,
Yeah, but it's not in the
VMware is applied.
Of course, VMware and IBM, but
And IBM.
but it's applied, right?
Yeah,
It's
I think it's Sholem. It's applied research, and it's I think it's also less organized.
Right.
So if you think deep learning has some of the trends and the directions that everyone goes, I think yeah. I don't think that, but it's also because of
It's a move on VMware's side, maybe to move in that direction.
yeah, but there are, but all. I think that another thing that blockchain is much more disciplinary thing. It's not like it's both crypto and distributed and economics, multidisciplinary. That's why and that's different aspects of it. Going more to crypto. So there are a lot of parts, and there are research in every one of those parts. And I do think that we are in this space of it. We are in a place where there is a lot of complex problems to solve. We still feel there is a lot of complex problems to solve. It's not like, and I will compare to the other fields that are also distributed, like cloud computing, where you see the progress, but I think we see where it goes and what will happen. Here, both from the economics part and technology, we are not seeing where we will be in 10 years. At least I don't.
So, I have a perspective. Basically, I started my first company a year out of college, and undergrad. So, graduating college and dropped out of my grad school. So, and I was doing distributed systems research and information retrieval research on collaborative filtering, recommendation engines, and the industry just basically kind of started pulling me. Back in the day, it was called social. Well, it's a big thing now, but like it wasn't that big. Basically, in 2006, and so part of the thing that we ended up doing is so everyone knows Farmville as a game, but we ended up inventing burst concurrency scalability on top of AWS. We were the largest AWS distributed systems on top of AWS before Netflix and Dropbox, and so what I would basically say is, and when I caught up with that UIUC computer science head, he basically told me that in a conference with UIUC with MIT, Carnegie Mellon, kind of computer science heads, as well as system researchers, basically from the industry, they basically realized because of the data problems and other things, that more problems were basically being solved in industry than in research, because simply you didn't get access to basically the type of problems, basically. And so I would basically say, basically like, back in the day, when I studied distributed systems, everything was theoretical, basically. And in blockchain, there's a real chance to basically apply a lot of these things in practice. And if you basically see basically the progression of the internet is simply a coordination system, basically between human beings. And you could argue that the first progression of the internet was simply basically a using iterative games, iterative social games. This as reviews and ratings and reputation to basically provide trust. And now you can basically see it spectacularly failing. Basically with Facebook misusing your data. Today it was just basically announced that they gave access to Russian search engines, basically Spotify and Netflix, access to all your private messages. And simply speaking, basically the the fact is, at least this is in the U.S., they survey people, basically millennials, and effectively the distrust for institutions is on the order of 60 to 70%. Basically, where what you basically see is there's a generational shift. Basically where they basically realize that the trust model of the internet is basically broken, and cryptography and consensus mechanisms can basically help yield the next wave to that. So I think basically the interesting thing about this public blockchains is the fact that effectively, basically you're creating a different coordination mechanism for and reinventing kind of different institutions. And I think it's a major wave. And basically, if you guys are interested in Daglabs, I have to basically say that obviously, and please come talk to me. So.
My comment was much more limited in scope, and it was only to say that if you're considering a master's or getting a PhD, all I'm saying is that going out to industry at this point in time, in 2018, for a year or two to test the waters and see what's going on out there, I don't think that in any way does that hinder your academic career if that's your long-term focus. That's the only thing I wanted to say on that. We prefer smart people. Good-looking ones too. I think that the example Aviv gave about Peter Thiel giving Vitalik $100K to drop out of college. I don't know who turned down Peter Thiel's undergrad application to scar him in such a way, but I think it's a very, like NBA players, allow me to say, stay in school, everyone. And I think that imitating Vitalik is a dangerous thing because very few people are of that kind of talent, and so the rest of us should do their homework and get their undergrads done. No, me? No, my dad is a few minutes away. He will kill. No, never. No, stay in school. I'm by no means advocating dropping out of by no means.
I would do that.
Yeah.
Don't play on him.
No, people think that if I drop out of school like Zuckerberg and Vitalik, then I will start Facebook or Ethereum. If I put on a hoodie, I will start Facebook. But that's not enough, apparently.
So I want to let the audience ask the questions. There's plenty. I've suppressed them, so now they're lying in wait. So, Eli.
I'm from the distributed computing aspect, and I saw around me a lot of people do distributed computing at pictography, and looks like in retrospect, right, mistake didn't join the game because my education was that consensus came out of two armies having to decide whether to attack or retreat, and I don't think that they should use blockchain. Because really, first of all, you have to the blockchain. I don't think there is any way to guarantee safety, and safety is something very important. So if the moment that we go to this, we have to say that the application of blockchain is probably not for very important things, because if you hang important things of very important thing of cryptography, there will be miners that will not mine for the block, but will mine the secret that you hold. They'll put enough computer power to put it, and will break this one or two problems that can solve the whole thing. The second question is whether, as producing the shovels, when you know that the shovels are doing in a way nothing, and today even today, against political correctness, even contaminating is there not a little bit of we should not run into this pot?
I have actually an answer on both.
Gadi answer after that.
Okay. first, there's a nice use case that people don't know that blockchain is being used there, and this is following drugs when you do medicine, right? So you have a producer; they produce the capsules, and then they would like to have something similar to a paper with a hologram that follows this. And whenever you change hands, the person at the end receiving the goods knows that it's legit. And it's hard to do at scale, and it's hard to do in a way that takes into account how all the logistics is made. You know, you put them together and they're shipped and then distributed differently. There's really beautiful work being done there on blockchain that lets you have the trust as a consumer at the end that what you're getting is not a fake drug. And fake drugs is one of the major reasons for death or rising reason for death in the world. So there are real use cases, and companies are actually starting to apply them without saying the word blockchain, because it goes to those ideas of tokens and stuff like that they want to dissociate from. About those shovels, let me give you a small story. End of 2017, there's huge lines of people at the ATM at the Bitcoin embassy. Huge lines. So people coming there and want to buy in cash Bitcoin and taking a number because there's long wait. I happened to stroll by, and I approached one of the people there, mostly guys, by the way, very similar to this group here. Sorry, mostly like male. And I approach one of them and I say, this is gonna go down. It's like, what are you talking about? Steppers, are you trying to take my spot? Like, no, dude, you're paying 5% fee. It's a lot. It goes in my pocket. Don't stand here. It's gonna go down. It's like, it's okay. I'm not buying Bitcoin. I'm buying Ripple. Ripple is amazing. Have you heard of Ripple? So, and yes, like I've heard of all of them. I'm in this industry since 2012, and I'm telling you that this is going to go down. And it's like, yeah, but yesterday it was at 14K. Today it's at 17K. Step aside. I want my Bitcoins. So there's only so much you can do with that kind of dynamic. There is people do want to put their coin in the slot machine, and unfortunately, when you have those huge bubbles, that's exactly the dynamic that happens. People are taking tokens and running them on those machines. Thank God that we're no longer in this kind of situation now. People that would be buying today would be doing it from the perspective of blood in the street. That's the time to buy, and not from yesterday. It was 1,000 less.
So if I understood correctly, there were two questions there. One was about the security behind the Nakamoto consensus and that we shouldn't put anything important on that. The most interesting thing about Nakamoto consensus is that it's been tested for 10 years, and so far on Bitcoin we don't know that it failed. Maybe it did, and we But the stake is very clear, and the path to money is very clear. If you break it, you have a lot of money that you can make of that. It's a very short path. So maybe we're not there. Maybe there definitely are risks. The Nakamoto consensus is not about 100% fault tolerance. I do have a question to the audience, and maybe we can do like a hand voting. How many of you have a technical computer science or math background? Can you raise your hands? Okay, so that's a really interesting thing. That's like 95% of people here with a technical background. One of the big questions from my side about Bitcoin and blockchains is, why don't we have other aspects of academia involved? We're talking about consensus mechanisms, and we seem to think that this is a technical problem, but we really have a social question around here. And I don't see the lawyers, the sociologists here, which is this is a very interesting area to explore.
There are a lot of lawyers doing this, by the way, and some of them are in the Hebrew University. We just didn't invite them because they spoil the math and they don't let us do equations and proofs. So we talk to them when we're tired. No, I'm kidding. We actually should be talking to them more. Being seriously, more seriously. Yeah, that's a problem, and a lot per 6 minutes. I mean, no, but I think the blockchain world, in some sense, is going to hit regulation in all sorts of ways. I mean, both the permissioned and the permissionless. Whether you believe one will succeed or not, regulators are looking at both of them, and they're asking, what can we do? What should we do? What should we stop? Even the mining that's kind of slipped under the radar. At some point, there was somebody in New York saying maybe miners are money transmitters, and should we think of them as that in that way? Maybe Lightning nodes are money transmitters. Should we think of them in that way? The regulation's not written yet. A lot of these things. So lawyers should come into the game. They should definitely give their opinion. And maybe what we need is somebody who's bilingual, not just in implementation and theory, but also in bilingual in computer science and law, right? Because a lawyer that doesn't understand the protocol, some people think Bitcoin has value because you burned a lot of electricity way back when you created it. That's sunk cost. And lawyers read that in the paper and they say, obviously this thing is going to fail. And economists say, well, so what is this thing? Obviously it's a false claim in economics, and they may discard it. So we need people who understand the technicalities and have their own view on society, right?
So I still have more to say about that. The one more thing that we need to understand about any product is that you don't have to have a 100% fault-proof product. You just need something that's better than what you have right now. And the banking system right now is not better than Nakamoto consensus. That's just the fact. I mean, you want to elaborate on that? But before I pass the mic, I want to answer your second question, which was about burning electricity for nothing. And the answer is that we're not burning it for nothing. We're burning it for security. We decide how much we want to spend on securing the network. Right now, that sum is 12.5 bitcoins per 10 minutes. That's the consensus that the community decided. This is what the security is worth for us right now. And the other misconception that we have is that we're burning electricity, extra electricity, where in fact most of the mining is done on access capacity. You have you have power stations that produce 100 megawatts per hour. 50 of those go to actual usage, and 50 are going to be produced whether they're consumed or not. And that's usually where miners go, because that's the cheap electricity. And mining is all about cheap electricity. So you can trust miners to find that access capacity and not to burn extra electricity to secure the network.
I will add two things to the consensus. I think one of the things is, we need to find better consensus, the consensus that don't require this electricity. And one of the things that permissioned networks did, they said we are smaller, we have trusted parties, we can do it more effectively. That's the scale. And about this probability consensus, I think when you come from theory and distributed algorithms where you prove things and you find them, safe and 100% safe, then you come to the real world of the system where things have bugs, problems, downtimes, and so on. So even if you proved the algorithm, you implemented it, you have problems, and things are probabilistic as well. So in some sense, here I think, and I tend to agree with the, you prove it by the way that it works for years, and no one, succeeded to break it. We do need to find, more effective, efficient ways to do it.
There's one area though. When you're using very advanced cryptography, people tell you, okay, how can I know that your cryptography works? I can trust your words, but how do I know that your claims are true, that you cannot, in our case, invent a proof if you don't have the data that verifies the constraints? And there's a lot of effort that is academic and is at the juncture between academia and industry, where what we really want from the academia is this stamp that says, yeah, we reviewed everything to the best of our knowledge. These are the trade-offs, and if you want more security but less scale, or more this and less that, this is the framework in which you can compare different theoretical schemes. And there is actual work done on those parts, on making sure that the academic world agrees on how to measure stuff and where to put the boundary on what's acceptable, and the industry can rely on those groups of experts looking at the problems and expressing their opinions. And this is done in a much more in an interaction between academia and industry than you would expect. It's fed by the need of industry, but the work is really deep. That effort, by the way, is called zkproof.org. That's a plug. If you're interested in how zero knowledge proofs are being standardized, compared, interoperability between schemes, benchmarking, all the actual practical knowledge about zero knowledge proof. The first workshop happened in MIT back in May. It was a huge success. The leading professors in the field of zero knowledge assembled there. In that steering committee, it's led by Professor Shafi Goldwasser, who's also on another note, one of the advisors of QED-it. And there's another session. The next session, the next workshop, is going to be much larger in Berkeley next year. And look at ZKproof. ZKproof.org. Sorry.
Hi, a quick follow-up and two quick questions. A quick follow-up. Just today, a couple of hours ago, Vitalik had a conversation on Twitter with one of his students, University of Toronto, who was developing some stuff for Ethereum. And after some conversation in Twitter, the student said, I'm going to drop out if I get 100,000K. And Vitalik said, okay, I give you 100,000K in Ether. And he said, okay, I drop out tomorrow. It happened just today, a couple of hours ago. So this is a follow-up. And two quick questions, mostly for Sizhao and people from the permissionless land. First, your advice on people from academia who want to be founders. What mistakes do these people usually do? How to avoid them? And second, whether permission networks like Bitcoin enable some new monetization models in principle, not advertising, not subscription, but something completely different. What's your view on that?
Sure. So quick answer to the first question, find a good business partner. Hopefully someone you can trust. Okay, and in the trust list, trusted party, yes, in the world of trusted parties, find someone you can trust. So that's the first. The second thing, you asked about monetization. So monetization, I think, is a huge challenge. One idea that we sort of explored, we called it tech for tokens. With all these different projects, our technology can be applied at layer 1, meaning into the protocol, in the blockchain protocol layer, or layer 2, which is the layer above it. And we said to all these projects, how about this? You give us some of your tokens in exchange for us integrating our technology into your platform. In essence, give us equity in your network. The network will appreciate in terms of its capabilities and value, and we will also benefit from that. The problem with all these entities certainly was a year ago, and I think it only exacerbated over the past year, is that unlike a grocery store that has some sort of business model, they have a 2% margin, but they know what's coming in and know what's coming out. A lot of these people have no idea what the business model is. So they have this virtual pile of tokens, they have a pile of cash, but this is it, okay? And they have no idea of where more resources are going to come from. So if you say, well, give me some of that pile, they say, well, I don't know, this is the only pile I'll ever have, and I don't know what the revenue is going to be. So we actually saw that monetization there is going to be a considerable challenge. That's why we're trying to focus on areas like decentralized exchanges, where the business model is much clearer and where monetization is much simpler.
Yeah. So my perspective on this is, I think within crypto networks there's going to be huge power law, and so and then it's going to be divided among domain-specific validation blockchains, and then generalized validation kind of blockchains. And so for domain-specific validation blockchains, you have to focus on a niche and dominate it. So it's the typical kind of way. You know, nowadays because of VC porn, you know, basically, you know, people think big market, big, you know, good founders, great technology, and the reality is niche market, dominated, and domain-specific validation. And if you can basically do it, the token model works. You know, basically, and then the other side on generalized kind of validation is effectively what you're trying to create is almost all the currencies are competing for a store value in some manner. You know, basically, so a currency is basically made of three kind of key characteristics: store value, medium exchange, and unit of accounts. You know, basically, so, and then you could argue that there's two aspects: single player mode and multiplayer mode. You know, basically, the classic Silicon Valley phrase is "come for the tools, stay for the network." Instagram was primarily a filtering kind of a thing that can basically be shared among your friends. So the key tool is something that's single player mode to put it in game kind of a sense, and then multiplayer mode, you know, basically to put it in kind of a network sense. And so for generalized validations, the reason why the token model doesn't work is effectively you're trying to compete against USD or gold. And whereas most startups basically think they're basically in a normal tech startup, you know, basically competition. So obviously 99% of these things will basically fail. You know, basically, so, and generally speaking, there's two other approaches. One, what I basically mentioned is basically more currency-based kind of crypto network approaches, and there's other horizontal approaches. You know, Bitmain, Starkware, and other kind of things, where effectively you basically focus on concentrated know-how. And so the open question has always been, you know, if Hadoop or Spark is open source, then where is your intellectual property? And what you've seen with basically Red Hat and you know, Hortonworks and all these things that are attached to basically open source projects is that know-how is arguably as important as basically the actual software, whereas traditionally basically it's not been the case. So with Red Hat, you basically monetize on services. With Docker, you monetize on software as a service. And there's a lot of different models. You know, basically you can basically, this is basically called a complementary kind of a service model. So, and so you basically say, we're not building a crypto network. We're betting on crypto networks or blockchain or whatever it be, but we're taking a traditional revenue approach, and we're going to basically be a layer on the bottom or on the top, you know, basically. And if you've seen basically what's happened with open source software, is everyone thought open source software was always going to be free, but there ended up being a lot of services on top. You know, basically you could argue that Amazon Web Services was one of the largest beneficiaries of open source software. So there's a lot of opportunity for capitalistic organizations in this kind of area. But, you know, basically you have to be careful of your business model choice, and then which area you focus on dominating.
If I
want to take this question because we're running out of time. So last question.
I had a one sentence summary of that actually. If you know, if you have a strong opinion on some topic and you know that you see in advance something that other people are not seeing, you're strongly convinced that you're seeing something that people don't see, but it's obviously true. This is where things are going. That's your trigger that you need to go and fund your company, because you're gonna place yourself in an area where you at least have the advantage of having thought about the area before people caught up to understanding that that area is an area of interest. So if you have that, if you recognize that, then yeah, drop everything and do it. Before you recognize that, it's risky.
So if this was a weapons industry panel, it would be uncomfortable or even impolite to ask you what do you think about the use of your weapons. You know, is it good? Is it moral? But this is not a weapons industry. This is a cryptocurrency. But I still have an equally uncomfortable question, which is the fact that proof of work is extremely environmentally harmful, and and in an inverse proportional way, the more successful the industry is, the more harmful it is, almost in a disconnected way to its value, in disconnected way to its social welfare, only to its speculative value, because it's worthwhile to spend more money on mining, and therefore the crash of the Bitcoin value helps save the planet. So that's one good thing about it. So I would like your more direct feedback on this, and specifically my personal opinion is that if regulators were not asleep, they would have regulated away proof of work. The same way they phase out diesel engines and petrol oil. So they should say, okay, well, guys, come on. You have 5 years to get your act together, find an alternative to proof of work. After that, it's illegal. That's what I would have done if I was the world regulator on cryptocurrencies.
First of all, I think a lot of those comments are virtual signaling. You know, basically it doesn't reflect basically kind of a real life marketplaces. You know, basically, so first of all, there's data on mining. They tend to go to the lowest cost. So a lot of the mining costs basically tends to be with green energy, with wind energy, geothermal, with basically excess water. So in specifically in kind of across the world, basically it's concentrated in Iceland, which is geothermal. Washington, which is basically water, you know, basically Canada, which is basically shale, excess capacity tar oil and shale, and Sweden, and there's, so I completely disagree with basically the fact that it's a social welfare tax, a social tax basically on everyone, number one, and number two is if you understand anything about the central banks and what it's done in the last, you know, basically 200 to 300 years, you know that basically the bubble, and you know, you understand that basically your purchasing power gets decreased basically, or inflated or deflated away based on the whims of financiers, and it's the central banks. You know, basically and people basically always thought this happens with developing countries. You know, basically. And in fact, basically, because of the way the Turkish speculators basically borrowed money from the U.S. and speculated on the lira to basically finance infrastructure projects, the lira dipped by 40% this year. And number one. And then number two is, even in Israel, I see, and in tier 1 cities, you basically see a real estate speculation bubble. And so the common refrain of the central banks is, because basically the inflation is measured basically by traditional kind of purchasing power measures. There's no inflation, but it's very obvious to anyone that's in the real world that basically there's massive inflations in real estate, and basically for normal people. And what I'm basically saying is basically your second point is you basically make an implicit point that cryptocurrencies are immoral. You know, basically. Yeah, so proof of stake has been attempted before. It's not actually proven to basically actually work, and you know, Definity, Hashgraph, and a number of these things is TBD right now. You know, basically there's a you know, basically, yeah. So you know. Anyway, sorry, I didn't mean to. Yeah. Okay. Fine. You know. Okay, fine.
All right, so I guess I'm going to cut off this excellent debate. I want to thank the panelists for taking time off their very busy lives to come here and talk to us. Thank you. I hope you stay around. We have a coffee break, then another talk from Goon, right? At 4:30. So there should be coffee. 30 minutes. to catch some air.